Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these roundtables, free mentoring sessions, week after week after week. This is a 398th session. We started experimenting with this model of online mentoring way back in 2008, in September of 2008, and now we are coming on to our 400th roundtable, and it's been an incredibly enriching experience of working with so many entrepreneurs, probably over 75,000 entrepreneurs now from all around the world, and learning about what you are doing, what kinds of issues you're struggling with, and what is happening in different parts of the world. It's really, really interesting. So this event is being recorded. This recording will be available on our YouTube channel, and all prior recordings are also available on our YouTube channel, 1M1M Roundtables. Now, this is a great body of learning material. So if you are looking to, fill some commute time or, time when you're trying to do something while you're driving or traveling on a metro or a taxi or whatever, this is a very, very good way to just enhance your entrepreneurship knowledge by listening to a whole bunch of these sessions. Now, if you're live tweeting the show today, please use hashtag 1M1M, and you can join us on Twitter at 1Mby1M and at Ramana. And you will see that we publish a tremendous amount of valuable content, great trend information, inspiring case studies, entrepreneur journey stories, thought leadership stories, analysis of companies, acquisition strategies, et cetera, et cetera. So if you're interested in the technology business, technology startup business, technology innovation business, this is a great channel to follow. And we are obviously doing a roundtable. This is not a broadcast, it is a roundtable. So be sure to make a note of these dial-in numbers. Be sure to plan on dialing in later in the program as we open up the session for Q&A. We're not quite ready for that yet, but we will be. It is a roundtable. We want you to participate. And you can also, meanwhile, start participating in the public chat. Make sure you set your chat to send to all participants. It's a great pleasure for us to introduce to you Jennifer Carolan, co-founder and general partner of Reach Capital. She's our first guest today. Jennifer, welcome. It's great to have you on the show.
Thank you for having me. It's a real honor to be invited.
So Jennifer, tell us a bit about yourself, your investing focus, and Reach Capital. How big is the fund? What do you like to invest in? What size investments do you make? Let's get our audience introduced to you and also help us get to know your work.
Sure. So we are an education technology investment fund, and we're based here in Palo Alto, California. We started in 2011. Our first fund was $12 million. Our second fund, which was launched in 2015, was $53 million. And our third fund, we're just closing, is $75 million. So we're in that micro VC category, I guess. Yes. And we are vertically focused on education technology. I'm coming from a background.
Is that your background, Jennifer?
Yeah, my background is sort of an untraditional path into VC. I was a former classroom teacher, and I taught in the public schools in Chicago and the Bay Area for 7 years. Went to grad school and moved to the Bay Area and really caught the entrepreneurial bug and thought the best way to improve some of the challenges that I saw as a teacher would be through investing in entrepreneurs that were launching companies in education.
Okay. And what is your typical check size in the investments that you make?
Yeah, so when we started the fund, the seed rounds were about, the average was $750,000. So we would invest between $1 and $200,000 and syndicate the rounds. And as you may know, the seed rounds are now double that, $2 to $3 million. So we usually lead at the seed level with $1 million, and then for Series A, we'll do $2 to $4 million.
Okay. So I guess since your focus is EdTech, could you double-click down on that and help us understand how you look at EdTech? Obviously, there are both B2B opportunities within EdTech and B2C opportunities. Are you investing in both of those types of opportunities?
Yeah, that's a great question. So we consider both B2B and B2C across early childhood, K-12, higher ed, and lifelong learning.
Okay.
So we invest across that whole life cycle, from parent education for a child as a baby all the way through corporate learning.
Okay. And what is your geographical footprint?
Yeah, we don't have any sort of mandate that requires us to invest in certain areas. We're a traditionally structured fund and can invest wherever we want, but most of our companies are in the Bay Area, just given the density of tech startups here, and our background being in education and coming from public schools is where our network has been traditionally. However, we have invested in 2 European companies, a couple of Canadian companies now, and some companies in Boston and New York.
Okay, excellent. So I think what would be the most interesting for the audience is to learn about some of your portfolio highlights. So talk about some of the companies that you have invested in, and specifically if you could give us a window into your thinking in, what stage did they come to you at, and what was your thinking when you chose to invest in those companies? What is it about those companies that made you think that these would be great investments, so that we get a flavor of how you look at deals?
Sure. So about 20 to 30, maybe more, companies come inbound to us through our network, through our website, through entrepreneurs. And many of our investments are made through this inbound deal flow. However, some are proactive investments outside when we've developed an investment thesis, and we go after a company, an early stage company in a certain space. So there's a company, I'll talk about one called Nearpod. It's a company that we invested in 2012 and are still actively involved. I sit on the board of Nearpod, based in Miami now. But this one came inbound to us. I think it came inbound through an associate, and it looked as if it was based in Brazil, and so it didn't look like, we couldn't sort of tell from the application what their focus was. So I delayed the first meeting for a couple of months, I guess. And we ended up taking the meeting with the founder, his name is Guido, and he had developed a software that synchronized devices in the K-12 classroom. So basically, like in the U.S. public school classrooms and private school, actually, the penetration of one-to-one right now is between 60 and 70%. So that many, 60% of students have one device per child in the classroom. So these devices were flooding into the classroom. The iPad had just come out. Schools were adopting them in droves. and there was no software to synchronize the devices for the classroom teacher. So as you can imagine, for a teacher, that was really tough. Like they were on YouTube and, you know, I don't know if Snapchat was around back then, but the kids were not on task, and the devices, there was no real way to take advantage of the devices. So Nearpod creates a software that synchronizes the devices, allows the teacher to have sort of a control center where they can push out content, receive responses back from students. They have a dashboard. They can synchronize PowerPoint presentations, things like that. And that one, you know, we saw super early. I think they had just launched, but we knew, because we knew the space really well, that this was something that was needed in the classroom. We made a $200,000 investment. I joined the board, and we've been, you know, working since then. The company has now raised, you know, $40 million. They're market leader in the space, and they have a content store.
What is the go-to-market strategy, Jennifer, for this? It's very interesting.
It's a go-to-market strategy which we love for K-12 companies and more and more higher ed, which is freemium. So it was free to teachers, and so teachers could adopt it and have a certain number of licenses and a certain set of functionality. And then it's the paid license. It's a traditional sort of bronze, silver, gold. You get premium licenses, and the premium is for districts and schools and has increased functionality.
So you have a sales force that's going and selling to districts and schools?
Well, that's the beauty of this model, is that the product is so good that teachers were adopting it word of mouth, and the sale to the school principal and eventually the district the friction was really taken out because the product was so widely used and loved by the educators. So they were evangelists for the product for the sale. They eventually did have to develop a sales team, but it was, you know, 4 or 5 years in before they even hired a salesperson.
And what is the, you know, what kind of penetration does this company have now into the school system?
They're a market leader for schools that have one-to-one. For paid services, it's more than 10%. And then they have much higher free usage.
Okay. And so it sounds like this is a business model that is also scaling.
Yes, scaling really nicely, doubling revenue year over year.
Can you talk about another company in your portfolio where the business model is working? And I'll tell you why I'm asking this question, because, you know, in EdTech, we've seen a lot of companies where the business models have not scaled. So I would actually, once we get through the discussion about your portfolios, I'm going to ask you a question to comment about how you are, you know, how do you see that, how do you view that in the EdTech space? So let's do a few more case studies first, and then we'll go to the general trend question.
Sure. Yeah, this notion that you can't build successful companies in education, obviously we don't buy into, because we think that you need a specialized skill set and knowledge of the space. And if you it's similar to kind of life sciences, right? Like the investors behind Theranos were not life science investors and didn't have that specialized knowledge. If you look at their board, it was very random. And, you know, we think the education technology space is similar. You need investors who deeply understand the space, the regulations, the motivations, the buyers, the pools of money, what's important. And if you understand that, it's actually a space that's very stable, consistent. There's a lot of money that goes into the education sector, and it's growing rapidly. So another example is a company called Mystery Science. So this was founded by a serial entrepreneur, this guy Keith Schatt, and his partner Doug Peltz. And Doug was a former teacher from LaPorte Schools in Indiana. And they were both sort of in love with science and felt like there was so much more that could be done in teaching it effectively to students, that to kind of bring the wonder and the questioning back to science instruction. So they also looked at and realized that a lot of science teachers, especially in elementary and middle school in the U.S., don't have backgrounds in science. So, you know, sort of pushed off as a subject, or they just didn't have the confidence to teach it because of the lack of background, strong background. So they created a series of videos, and the videos are very inquiry focused, and they are very engaging and exciting for the students. And the teachers will show them in their classroom, and then there's a sort of follow-up activities and a curriculum that goes hand in hand with it. My kids love the mystery science videos, and they also have huge penetration in U.S. schools. So they did classic freemium model as well. They still do not hire any outside sales. It's all inside sales, and again, kind of built off of this heavy usage, and then sort of upgrade into the paid version.
So is that the general format that you're seeing in the companies that are succeeding in your portfolio? Is this freemium kind of getting in through teachers with compelling products, and then the teachers basically evangelizing the sale to the school, and then your inside sales teams processing those orders and finishing the sales cycle?
Yeah, that is the model that reduces customer acquisition cost. And I love this model personally because as a teacher, we had software foisted upon us by the administration that we had never had a chance to use.
Right,
and it was just sort of a agreement with some salesperson who sold a bunch of CD-ROMs to the superintendent. Maybe they were on a golf trip and sort of passed out the deal, and now the teachers have to use this software that is not relevant to their students and doesn't work. So I love this model because it's good for teachers, it's good for schools,
and it's adoption-driven already.
Yeah, it's more like a product meritocracy, and the best products are rising, and I like that. But we also have other models that are very successful that are just straight up SaaS or consumer. I'll just quickly name two. Elevation Education. Elevation Education is based in Boston. This company sells essentially sort of compliance tracking software for English language learners in the U.S. So ELLs are the fastest growing subpopulation of students, about 5 million English language learners in our public schools. And this software helps kind of track the needs of these students and tracks their assessment so that they are getting the supports and instruction they need to kind of quickly learn English and get mainstreamed into the typical regular classroom. And also sometimes ELLs are wrongly tagged as special education when, that's totally a different thing. So this is a company that I'm really excited about too in terms of impact. And they sell directly to districts. So they don't even sell at the school level, and they have a sales force. And their metrics look like traditional SaaS company. And then we have a company called Epic Kids Books, and Epic Kids Books is Netflix for ebooks. So they have thousands of ebooks, and it's free for schools. And then if parents choose to buy a subscription, they charge subscription to parents. So it's consumer model. And that's, like the Scholastic books in the U.S., where there was a little leaflet that came home with families with a child in their backpack, and they could order books. It's very similar, but this is a sort of modern tech version of it. And there's good research to show that the ebooks can be more engaging for students, and they can recommend to each other, make it social, And so that one is in about 90% of elementary schools in the U.S.
Mm-hmm. And that's selling directly to the schools?
No, that one is free to schools and charges parents if they
charges
choose
parents,
to buy.
But how do you sell? What is the sales cycle?
So their distribution is online. They don't have sales. It's like it's through online and through through mainly parents learn about it through schools.
Schools, I see. Okay. So you do have to work with the schools to distribute the knowledge, the information to the parents. Yeah. Okay. And all of these different go-to-market strategies are scaling, you're saying?
Very well.
Okay.
Yes.
So I guess the real question, the reason this has been a concern in EdTech, and I'm happy to hear examples of models where your companies are scaling, is that, you know, VCs typically want to see companies go from 0 to $100 million in 5 to 7 years, which is a very, very fast growth rate. And for a long time, EdTech companies were not scaling at that kind of pace. So it's good to see that you are seeing better adoption and faster scaling in your portfolio. What do you think that is owed to? Is it because there's a new generation of teachers that are more tech savvy and are bringing in technology at a more fluid pace?
Yeah, I think that there's a number of reasons for that. One is that in the 90s, during that first wave of EdTech that was reaching schools, they didn't have the one-to-one, right? There was usually a computer lab, and the school IT budget was 75% hardware, 25% software. Now that's inverse. The cost of hardware is driven down. The devices, Google Chromebooks and low-cost iPads are flooding into the classrooms, and most of the IT budget now spent on software. The second driver, and I'm talking specifically about school kind of B2B SaaS types of models, is that the way that one of the big line items for schools is textbooks. Textbooks are going away. We liken it to the sort of cord cutters of the you know, the cable on TV. So, you know, the 22 million Americans got rid of cable, cut the cord, and are going to streaming and different online services. And so the same thing happening in our schools. The textbook adoption process was very top-down, state-driven, happened every 7 years, not much room for innovation and new upstarts coming into the schools. So now schools are doing away with the textbook, realizing it's an old, dated model here, and they're using online digital content and piecing together sort of their curriculum and having some version of, you know, a slimmed down version of like a textbook along with supplements like a mystery science, for example. So that's a category. A large amount of money is spent on textbooks, and that's sort of opening up to new online providers. That's another. Third is just international interest, is that companies are growing rapidly outside of the U.S. So on average in our portfolio, 15 to 20% of the user base are outside of the U.S. A company like Class Dojo, you know, has, I think the U.S. is like their third or fourth largest market. So they're used, you know, outside of the U.S. and in India and Europe and UK, all over the place. So
and
that's
what is the product
opening up
for
new markets.
Class Dojo?
Class Dojo is it's a set of tools for teachers to help manage the culture of their classroom. So all of these kind of little widgets and tools, things that teachers do in analog right now, like sticker charts and, you know, timers or measure the noise volume in the classroom, or they also do social emotional learning content videos, So things that teachers need to kind of manage their culture and for effective learning in the classroom. Also, communication to parents is a big part of the Class Dojo platform. So that one is also free and spreading really quickly.
And Indian schools are actually paying for these?
Class Dojo is free.
Class Dojo is free, I see. So what is their business model?
So they will be a consumer play, and they are already experimenting and monetizing some of their content that is like premium content for parents to buy.
Because the reason I am skeptical about that model is, you know, especially if you're talking about Indian schools and stuff, that is not going to monetize very well. We are very familiar with that market, and that market hates to pay. So this is the kind of companies that we have seen experimentation with that don't scale, and they just kind of suck up venture money and then end up not being successful in monetizing.
Do the parents pay for education, enrichment, or education services outside of school?
Yes, they do. But remember, it's a very tiered society. So there is a class of people. You're going to have to position it so that that you tap into the school systems where there are parents with means. And it has to be segmented very specifically and steered towards that set of parents.
Yeah. And what do they pay for? Enrichment or test prep?
There's a lot of test prep payment. There's a lot of tutoring. There's an incredible tutoring industry in India. My cousin was saying that the school that his daughters go to are assign a lot of projects as homework, like you have to do these presentations, you have to do all this research, and there's apparently the set of service providers that have come about who actually outsource those projects and do it for the kids. So my cousin went to the school and said, what is the point? What are you trying to do here? You know?
I mean, I think, though, that like what we're seeing in China is that there's a demand from the parents for social emotional learning. I'm sorry, I'm hearing some feedback.
Yeah, can you, I suspect WebEx support is doing something funky there. Can you please not do that so that our call doesn't get disrupted? Thank you. All right, go ahead, Jennifer.
The parents in China, there's a demand for like soft, they call them soft skills, which I don't like that term because I actually think they're very complex skills.
Yeah.
Skills around things like persistence and presentation skills and collaboration and negotiation and grit and problem solving. And these types of skills, some schools are teaching them, but only the most forward-thinking and progressive ones. And parents are realizing that for their kids to be successful in the new economy, that they need these types of skills, and so they are actually paying for tutoring services or content outside of school to support their children's growth in these areas. And there's a huge demand actually amongst the Chinese for these types of products. And I think that there's, I think it will happen. It's already happening here in the U.S. To some degree, but I think that is a trend that we'll see all over the place. Yeah. At schools, it takes a while for schools to catch up. It's not like the testing is it measures basic skill sets, but the soft skills are something that are more and more important, as we know, in the new economy. And until schools kind of catch up in that way, parents are going to supplement. Yeah.
So, the net of all this, I would say, my observation from working with a lot of companies over the years, and I do see the trends that you're describing of more classroom technology adoption, all the trends that you described, especially the teacher-driven technology adoption. I like that very much, and I think in that context, the freemium model works well, where teachers bring in technology for free and then the school adopts it in a premium mode. That model is great. I think this B2C premium model, I think it remains to be seen whether it is going to convert very well, because freemium B2C has always been very low conversion rates. And that is the venture capital model has had trouble with B2C freemium. So that one I have a question mark against.
Yeah. I mean, that's a fair assessment. I think it's yet to be seen, but there's some of our largest companies right now have that model. But I agree with you that it's going to be in very specific domains. Like, we know that parents want books for their children. Reading is an essential part of growing up. So that's going to go online more and more. It'll be this hybrid. And there's parents will pay for that.
Yeah, I think the textbook replacement one is so core in a school system's structure. That one may work and scale fine. I think all this supplemental stuff, I think it remains to be seen how well that's going to do.
Yeah, that's fair.
So have you seen exits yet, Jennifer?
Yeah, we've had 7 exits since we started. I'm just going to have an 8th one coming up here in a few weeks.
Could you talk about those a little bit so we get a flavor of what is happening on the exit side in EdTech?
Sure. So one of our most recent was a company called SchoolMint. And SchoolMint was basically like a mobile enrollment service. So when parents register their children for schools, they often have to take a day off of work and go to the school and wait in line and fill out all these forms. And so SchoolMint automated that process in a mobile app. And so parents could quickly, easily sign their kids up for school, but also it brought greater transparency and sort of education around what other schools are available, especially in these urban areas where there's school choice and kids can go to have a number of different options of where they can go to school. So that one was one that we seeded a great entrepreneur, husband and wife team, Janal and Forum. This was their 2nd company. And that one was acquired by a company called Hero K-12, which is private equity backed. And that was a very good outcome for investors. And, it's a great company, and I think doing a lot of good out there. But the other thing I love about this company is that many families in the U.S., especially in these urban areas, are mobile dependent, and they don't have a computer at home, just their smartphones. And so the customers, the user base of SchoolMint was a very high low-income user base. So,
and how did they acquire those customers?
They were a traditional kind of sales structure company. So they went into these districts, and oftentimes they had to go through the RFP process, and the technology was better, and the product was much better than their competitors. So they won St. Louis, San Francisco, LA Unified, like a lot of major urban districts.
I see. So it was a school sale, a district sale. Interesting. Okay. And what scale of exit are we talking? How far did they get to before they got acquired?
Our exits have been between 3 and 8 multiple on capital.
And how much capital have you put in?
So that one we had a couple million, and I'd have to check, but I think it was a couple million. So it's a good question though, because I think that we're very sensitive at Reach around total amount of capital into our companies because of the exit multiples. We don't have yet in U.S. EdTech multiples that are Uber-like. So we're sensitive to kind of total capital in, burn rate, how lean the team is.
I think you're describing some very good principles for building successful EdTech ventures. I actually completely agree with you that they do need to be capital efficient and they need to kind of manage their burns and so forth. And early exits are good in these cases because I think if you flush a company with $40 million in funding in EdTech, there are no exits for such companies, first and foremost. And secondly, I don't think they scale to a level of monetization to justify that kind of funding. So there have been those kinds of fundings in some cases, but I think those are recipes for failures, not success.
Yeah, I think we're sensitive, especially to the space. So like in the Schoolmint example, that was a SaaS, basically a SaaS school sale. So in that category, we know who the buyers are and we know what the exits look like. And, we had a wonderful company, our first investment ever, Goldbook. And this is they do special education, professional development and software, and, very, very good customer satisfaction, Net Promoter Score, impact in schools. And this team decided to buy out their investors. So they had about $1 million in, and they bought out their investors at a nice exit. And, they're an employee-owned business and doing really well, and it was a great outcome. Another example, the other issue is that with some companies that are consumer, we do have so much interest in the space from Google and Apple and Microsoft that I think it's, I don't think any founder should ever start a company thinking they're going to sell to one of those. But certainly their interest in the space is compelling and gives us reason to believe that, there could be some larger outcomes. We really focus, when we invest in our companies too, we're not thinking like, when's this company going to exit and when, we really want our founders to build high-value, large companies that are at scale and having a big impact, and that teachers love their products and parents love their products and students, and really focus on that and not worry about, who they're going to flip to in the next couple of years.
But that's not the point. The point is if you overcapitalize companies in EdTech, I think you run into this twilight zone of venture capital where companies are not acquirable and they can't find exits, and that's something you have to avoid. If you're in a space that doesn't have a lot of exits, you have to avoid that phenomenon.
Yeah, yep. No, I don't disagree with that.
So the other thought I have here listening to you is that it seems like there are some private equity roll-ups going on in this space. Can you speak to that?
Yeah, the private equity firms have been super active in education, and there are definitely, I think they see these platforms emerging. Publishers are dying. They've lost a third of their value in the last few years. And in their place are these emerging platforms that are going to become, I don't think there's going to be 20 of them, but I think that there's going to be a handful of canonical platforms in K-12 and higher ed, and potentially in corporate learning that are going to become, are already becoming market leaders and, major platforms. So that for sure is happening, and the private equity players are behind many of these roll-ups and platform creation.
And who are the private equity funds doing that, and what are the trunks around which they're doing the roll-ups?
Well, one of the biggest is Insight Venture Partners, based in New York. Yep. And they have very, very large funds, extremely savvy, smart investors in education. Education, I think, is it's just a 10% of their portfolio, but they have a lot of depth, network, and knowledge of the space. They're investors in Udemy and Pluralsight, and they were investors in Instructure. a number of other leading companies in education. And so those guys are very good. Vista, Providence, to name a few more. The School Mint was bought by a company called Hero K-12, which is backed by BV. So there's, there's different players out there getting involved. Yep.
Very good. This is a fascinating conversation, Jennifer. I could continue with you helping our audience understand the EdTech space for another hour easily, but I think we're going to have to give our audience presenters a chance to present as well. So thank you very much for all your insights and very pragmatic and yet very positive feedback and reports back from the EdTech corner of our ventures ecosystem. It's actually, what you're reporting is actually a substantial improvement on where we are, I would say, 2-3 years ago in the EdTech space, and that's very heartwarming to see.
Oh, thank you. Thank you so much for having me. And I think that education remains, one of the most exciting and meaningful places to innovate in. And John Doerr, said, we like to back mission-driven founders, not mercenaries. And you really get mission-driven founders in education. They are passionate about what they're building, and education has had big impact on them, and they are excited to build in the space. So it's I love the space. I think it's a great place to be innovating in.
Fantastic. Well, you are going to stay a few minutes for some pitches, yes? At least one pitch?
Yes. Yeah. Okay. I can stay for one pitch.
Okay, terrific. So, folks, those of you who are going to be presenting, a little bit of expectation setting here. Remember, we are on your side. There is no other agenda in the 1 Million by 1 Million program other than us helping you in your journey. So don't feel defensive, don't feel nervous. Just, come and talk about what you're struggling with, and we'll do our best to help you, remove those roadblocks, or at least strategize on how you might be able to do that. And it's okay if you disagree with the feedback you get here. That's fine. It's your venture. You're going to decide on what strategy you're going to follow. But we do speak from a lot of experience at this point, so it would be good for you to listen and consider the feedback you're getting here. The one thing that is not negotiable is that not all businesses can raise money, not all businesses should raise money, and raising money does not guarantee success. This is something you will need to take into account. There is absolutely no going around this fact. Okay, so let us go to Tamilvendan Rajaraman from Chennai, India. Go ahead and do your presentation, Tamilvendan. You go by Tamil?
Yes, thank you very much. Can you hear me?
Yes, we can hear you. Please go ahead.
Good morning, good afternoon, good evening, friends across the globe. From Vpharmacist, I'm Tamilvendan. I have my colleague and friend and partner, Venkat, also with me. We are an online pharmacy startup based out of Chennai, India. Online pharmacy is not a new concept in India. It has been there for the last 3 years. How do we differentiate? If we can move on to the next slide. We have just tried comparing ourselves in our first year of operation versus the key players. We have taken 3 key players, namely 1Mby, Netmers, and the pharmacy. Vpharmacist is B, and we have been there for the last 1 year. And if you look at the performance of us, if we consider us as 100, the performance first revenue performance of 1Mby was around 5.2, Netmers was 3.5, and pharmacy was 0.6 in their first year of operation. The numbers are there in the next slide. The figures are in INR lakhs. For people who are not familiar, 10 lakhs is 1 million and 100 lakhs is 1 crore, which means 10 million is 1 crore. We have used these two in our slides. So we, after investments of 2,976 lakhs or 2,113 lakhs or 1049 lakhs, whatever the other organizations have achieved, we have achieved in the first year at 85 lakhs of investment, and we have made substantial revenue, as you can see from these figures. And the performance factors are, we are 1/19, 1/28, and 1/165, which means we have so many times we have given better performance. And look at the last but one point, which is the fundraise. These three organizations, for instance, the other key players have come in with investors coming on board in their first year of operations. Whereas for us, it was on bootstrapped funds. Totally.
So your 85 lakh investment is your own money?
Absolutely. It's bootstrapped by the promoters.
Okay.
At a small fraction of cost incurred by other players, we have achieved product development. We have validated the product and business model. We have gone ahead with the revenue generation and started growing exponentially. What is the factors behind this? Key factors: operational efficiency for low cost, marketing strategy, and excellence help ensuring of the revenue. As I said,
so let's talk about the business a bit. I understand that you are doing great in terms of capital efficiency and delivering good metrics based on small amounts of investment. So can you talk a bit about what is the business? You're talking a lot about traction till date. We don't really understand the business yet. Is it just pure ordering medicines online? Is that the business? Is that the core of the business?
Absolutely. The core of the business is customers order the medicine online, and we buy these medicines from the wholesalers and deliver to the customers. We sell the medicines whatever we order. That is where our revenue or the sales come from, and whatever we buy we buy it at certain margins, and these margins will go up as the numbers would go up.
And what is the competitive advantage that you're tapping into? Where is the leverage that you are describing, that you are doing so much better than the rest in terms of your cost to revenue ratio? What is the source of that differentiation?
Yeah, first and foremost, the differentiation is that is for the product development and for going to the market. The others have actually have incurred a lot of costs, and we could able to do it at a very, very small. I think the key differentiation is the customer acquisition cost and the repeat business that we get from our customers. What happens is...
So what is your customer acquisition strategy?
The customer acquisition, we have got multiple ways of reaching out to our customers, starting from the online advertisement and then reference from those customers, WhatsApp, those kind of things currently. And as we go on, we would be advertising. So
now the question comes, why is your online advertising so much more efficient than these other players' online advertising? It sounds like the other players also are doing online advertising. What is it that is so inefficient about them and so efficient about you?
Okay, so if you look at our our customer acquisition cost is about 750 rupees per customer. What we notice is, what we ensure is 90% of our customers comes back to us repeatedly for making the purchases. We focus on chronic patients, and that is where we target all our advertisements, because these chronic patients, basically for their requirements of medicines for their ailments like diabetes, they need to buy month on month, and they need to, and the average transaction value also would be substantial. We are ensuring that these few points help, basically the limitation of the competition. The competition provides low fill rate. This is our own experience also. They do part delivery, partial delivery, which is not appreciated by the customer. They have this inadequate delivery because they do to deliver the medicines by courier. We dispense the medicines at the doorstep.
Sorry to interrupt.
Just a second, Tamil. Jennifer, did you have a point?
Yeah, sorry to interrupt. Just to drill down on that point. So you have this, it says you have a strong and loyal customer base. So how do you measure that? Is it through retention or customer satisfaction or net promoter, or how do you know that?
From the repeat businesses that we get,
get a lot of repeat orders.
What is your retention? What is your retention of your customers like after? Say again?
She's asking you, what is your retention rate?
Retention rate is more than 90%. Is the retention rate of our customers.
90%.
Yeah, more than 90%. 90% of our first-time customers keep buying.
Associated question, Tamil, is what's preventing the others to follow this strategy, and why aren't they following the strategy?
I think I would have to mention the third point on the limitation of competitors. Third and the fourth point, they have lack of knowledge about purchase practice because they are all typically, what you notice is there are technology people trying to get into the online business, pharmacy business, whereas our core team is basically they are all pharmacists who have run multiple pharmacies, for a long time, and they have moved into online area. What we are trying to do is we are serving offline customers and trying to bring them also into online. That is another strategy of ours. We ensure there is a high level of customer satisfaction by means of dispensing the medicines, completely providing what they need, and so on and so forth. So this brings in higher retention of the customer. We are utilizing our customer acquisition cost very, very effectively. I have referred a couple of other competitions. They have multiple lakhs, there are millions of downloads of their app, and their revenue figures have still been low. We have had about 10,000 plus of customers downloading, 3,000 customers having bought, and still we could able to achieve good amount of revenue because of the high, very high retention rate, and number two is very high retention rate and high average transaction value.
So I would say the gap that I see in what you're describing, and Jennifer, I don't know if you agree with me, is to some extent what you're describing seems kind of obvious to me. So if I'm running a competitor, I would pretty much implement these strategies. They're not impossible to implement. I mean, you just focus your customer acquisition on the chronic patients as opposed to people who do one-offs, and that's not a hugely complicated thing to do.
Yeah, I was wondering if there's something, I think you're getting at that, what is the moat, what is going to
the defensibility,
protect, the sensibility, and it sounds like the chronic patients is a great wedge into the market, no doubt about that. And then how do you take that initial wedge and build upon it? And it sounds like, you're doing so in part through fantastic customer service and creating loyal customers, which I think is an awesome strategy, and many a big business has been built on that. But is there something else there that you can do to get
to increase your market share over your competitors? Because it sounds like it's also a very competitive space.
Sorry, I missed the last sentence.
What she's saying, Tamil, is that it is a very competitive space, and I don't think either of us are completely convinced about the defensibility, your defensibility of the competitive positioning strategy vis-a-vis competition. So it sounds like you're also trying to raise money. Is that correct?
We are trying to raise money, but then as we have mentioned, we have shown the differentiation in the first year of operation. Our cost, cost revenue efficiency compared to others, and we are obviously we are open for due diligence, and they would be in a position to see the retention rate of investor can see the retention rate and the high average transaction value. Currently, we are addressing only one city, which is Chennai, and with very limited resources, we could able to achieve this. With the support of suitable venture capitalists, as we expand to other cities, we will, and even within Chennai, when we expand, within Chennai as well as to the other cities, we will be in a position to show exponential, revenue numbers and in terms of profitability as per the projections that we have done.
Yeah, so I think the issue that you're going to have if you go out to fundraise is the fact that there are already several significantly funded players in the market, and people are going to try to understand what is the defensibility. So I would, if I were to work on this venture, I would really focus on creating a strategy and a story, a narrative that you can defend with a much more convincing competitive strategy. That's the main issue that I see here. And I think the funding game in e-commerce in India has changed. It's not as easy to fund e-commerce companies in India right now. So I think the companies that you described have been around longer and have already been funded to a certain amount. And right now the market is not as favorable to e-commerce, especially not in a category where there are significant number of existing e-commerce players. What I love about your situation is that you have managed things in a very cost-efficient way, and you are able to grow and get to profitability almost without outside money. So that is a tremendous tremendous advantage. That is something that you need to take advantage of, and it may eventually become your winning strategy, because all these other companies that you're describing that are not growing fast enough and have poor metrics and poor unit economics are going to implode gradually, and you may be the last one standing, and you may eventually win the game just because you have staying power.
Thanks for this compliment, and I would also take this input. We have to probably show the differentiation much more much more strongly in our probably deck, and we will work on that area.
Good, excellent.
Wonderful.
But great execution so far. Excellent execution.
Okay, I'm going to drop off, but thank you so much for having me.
Thank you for coming, Jennifer. It was great speaking with you. Really good to get to know you.
Thank you. Have a wonderful day. Bye-bye.
Bye. So we have Mansoor Suleiman next from Ireland. Robozoids is the company. Mansoor, please unmute your line and tell us what you're doing. Sounds very interesting. Mansoor, are you on the line? Mansoor is not on the line. I'm going to start taking some questions from the public chat. Satyabama Venkatachalam is asking, good morning. I have a few questions for 1M1M. What do you suggest for companies in ideation stage? No MVP yet, no need for funds. Well, that is the best stage to start applying our methodology, you know, because if you spend 9 months, 12 months, 18 months kind of going down a path that is not sound from a methodology point of view, you end up wasting a lot of resources, you end up making a lot of mistakes, and often you end up pursuing ideas that actually don't have legs. So we prefer to have companies work with us early on as quickly as possible and start following the methodology that we use, which is a proven methodology. It works. Your second question is, can you pitch at an ideation stage? Yes, you can, no problem. What's the advantage or takeaway for early stage companies by becoming 1M1M members? You learn the methodology. So if you can, I'll talk about the full 1M1M offering. You can choose to become a basic member or a premium member. It doesn't matter. But the main point is we want you to follow the methodology from as early in your cycle as possible, and that helps you avoid the mistakes, and that helps you make a lot faster progress and burn through a lot less of your resources and your energy. Finally, what's 1M1M exposure and advice for blockchain startups? We have blockchain startups in the portfolio. It's a hot area of innovation right now, so we're seeing plenty of activity, and it's very early in the game. So there's a lot of activity in that space at the moment. So Mansoor, are you on the call? Do you want to pitch? Or Maureen, should I move on? Okay, folks, we'll come back to Mansoor if he comes on the phone. Otherwise, I'm going to spend some time focusing on explaining the 1M1M offering. Mansoor, your line may be muted. I don't know what's going on. But let me take a few minutes to explain to you how to use 1M1M, and we'll come back to Mansoor if he clears his phone line. And if you like what we're doing here in 1Mby1M, please bring 10 serious entrepreneurs from your friends and family into the program. And again, the question is about serious entrepreneurs. It takes many years to build a significant company. So we only want to work with people who have the stamina and the mindset to spend that kind of time and energy and longevity in building really serious companies. All our resources are at 1Mby1M.com. You'll find a terrific blog that you can access for free, and you'll learn a lot just by following the blog. The Entrepreneur Journeys book series, we have 12 volumes of books where these are case study-based books, 12 to 16 case studies each, and each double-clicks down on specific topics, whether it's bootstrapping with a paycheck or billion-dollar unicorns or e-commerce or cloud. These are books that will give you direct experience of how entrepreneurs have built companies in those categories using those specific types of strategies, and you'll learn a lot from them. These roundtables happen every week, week after week after week. We have a 400th roundtable coming up, and we are actually kind of getting up to 75,000 people at this point in terms of people who have been accessing them. There's a question from Satyabama, which is a basic question: what's the benefit of pitching in ideation stage? You just get some guidance on where to go. But I think what you will get a lot more benefit from, Satyabama, is actually joining the program and studying the curriculum and taking your idea and running that idea by the curriculum. And I'm going to very quickly, very soon explain to you how to use the 1M1M self-assessment. So hang on for 1 second. That slide is coming right up. Our full acceleration program is the 1M1M Premium. And that includes extensive methodology guidance, a full online curriculum, which is video lectures and case study based, that has over close to, I think, 800 case studies at this point. We help you with business development. We help you with strategy consulting in these kinds of roundtables. We have private roundtables for our premium members. And we also help you with financing and media relations. The 1M self-assessment is the most useful thing that you're going to use in the ideation stage. Take your idea, take the 1M self-assessment, look at the questions and ask yourself these questions. These questions will give you the kinds of questions that investors are going to ask you, and you really have to answer these questions to have a business that has legs, have an idea that has legs. And here, if you get stuck in terms of methodology items that you can't really figure out how to answer these questions, this is where going and signing up for 1M Basic, which is our curriculum-only option, and just working through that curriculum methodology points will give you the maximum leverage in terms of methodology guidance. So feel free to start with 1M Basic and then maybe join Premium a bit later, that's fine, or if you want to join Premium straight away, that's fine too. Whichever way you want to do it, methodology is something that we insist on very, very aggressively, and we know that methodology works. We have lots of examples of methodology that works, so of entrepreneurs who have worked with this methodology and been successful. So if you can diligently follow the methodology, rigorously follow the methodology, we know that you will make progress. So dig around on the website. There's tons of information on what to expect from Premium, Basic, video FAQs, lots of description of the curriculum, description of the case studies, video lectures, etc. It is a case study and video lecture-based program. We have over 50 unicorn companies, 400+ venture-funded companies, 350+ bootstrap success stories. You'll learn a lot from following these case studies. Our methodology is lean, capital-efficient bootstrap startups. It's bootstrap first, raise money later. You have to get to a certain degree of validation before investors would be willing to work with you. So these are, there's a whole platform on which you can base your methodology learning, training, and engagement, and the whole network of investors, customers, channel partners that you can plug into. That is it's a full-fledged global accelerator that you can leverage from anywhere in the world. So upcoming free roundtables, we have 2 more in May. May 10th and May 16th is our 400th roundtable. And then the rest are in June. All 4 weeks of June we have roundtables. I'm traveling for the second half of May, and so we won't have roundtables while I'm traveling. And we have a couple of more rendezvous, in-person rendezvous left on Sunday, May 6th. It's actually not at 5 p.m. PDT, Maureen. There's a mistake. It's 3 to 4 p.m. PDT. And Thursday, May 17th is 5 p.m. PDT. Sorry, the slide has an error here. The Sunday roundtable is 3 to 4 p.m. PDT. Okay, we are ready for more questions, and happy to answer any questions. If you want to dial in, or if you want to type in your questions in public chat, I'll pick up more questions from public chat as well. And let me also introduce you to Irina Patterson. She will be your contact point for asking questions about the program going forward. After this call, Irina at 1M1M.com. So, any questions, folks? The discussion in the front end of the program today on educational technology, EdTech, was fantastic. It really gives you insights into what's happening in the EdTech space, in the EdTech financing space, and so forth. What are the trends? What do you need to pay attention to, and all of that. So definitely, those of you who are EdTech entrepreneurs, it's a great segment to listen to. Anybody? Questions? Questions, comments, issues, introductions? This is also a good time to introduce yourselves and tell us who you are, where you're joining from, what brings you here, and so forth.
Hi, Shamana. This is Irina. Can I ask a question?
Yes. Go ahead.
Okay. Can you tell a little bit about what 1M1M does in the area of corporate innovation?
Yes. Actually, I will tell you a little bit. We have this incubator in a box platform, which is the platform we use for running incubators or enhancing incubation programs for corporations. Last roundtable, I spent about 15 to 20 minutes specifically on corporate innovation. And I believe the YouTube, that segment is available as a separate YouTube segment. Maureen, could you please share that with our audience here? So very briefly, any corporation, any government, any other incubator or an acceleration program can use the 1M1M incubator in a box to layer in 1M1M's incubation capabilities onto your program. And this could be for internal innovation, it could be from external ecosystem development, it could be for regional ecosystem development, it could be a city ecosystem development, etc., etc. So there's a ton of availability, you know, in terms of whatever it is that you want to use our incubator in a box program for. So Maureen is offering you the link where you have a 15 to 20 minute discussion purely on incubator in a box, and it's a great segment to listen to. Folks, I don't see any other questions, I don't see comments, or I don't see introductions. Anybody, any other questions, anything else that you would like to discuss? Otherwise, we're going to adjourn. The number to call, yes, here we go. The number to call is 650-479-3208, access code 665-286-364.
While somebody is calling, can I ask one more question?
Yeah, go ahead, Irina.
Sure. What is the difference between being an entrepreneur in Silicon Valley and being an entrepreneur someplace else?
Well, there are pros and there are cons. The pros are that you're part of a very vibrant ecosystem that is fully mature. You know, there are lots of entrepreneurs, lots of investors, lots of stuff going on, and you plug right into that ecosystem. There's energy, there is a level of risk-taking going on here that is rare anywhere else in the world. The disadvantage is it's super, super expensive and super competitive. So, you know, I would recommend that you come and pitch and engage with the methodology from wherever you are and get to validation. Coming to Silicon Valley, if you're planning to move here without validation, is a complete wastage of time. So don't bother with that. That's not going to be productive.
Yeah, I think it's a great advice. I think it's a very good advice.
Satyabhama, please go ahead. Are you on the call?
Hello. Yes, I'm on the call. Are you guys able to hear me?
Yes, we can hear you. Where are you dialing from?
I'm dialing from Fremont, California, from Bay Area.
Okay. Yes.
Yeah. So it's a great presentation. So I really enjoyed it. I know this is the first time I'm attending the Roundtable conference. So about me, I live in Bay Area. I'm a software engineer, so I have a background on embedded systems and ERP systems, and currently working on working as a blockchain consultant for a few startups here. So I have ideas on starting my own venture, and I am working on doing my MVP. So I'm still in the ideation stage, but I came across your name. It's it was very interesting to have a mentor. That is what specifically I'm looking for, and it looks like you guys are offering a program which is going to be beneficial, for very early stage entrepreneurs like me. So I thought, I wanted to hear what you guys are talking and wanted to be part of.
Absolutely, and you are in a stage where you have a source of income, right? The blockchain consulting that you're doing, I imagine, is a good source of income for you.
Yeah.
So I would strongly advise you to keep that going. Hold on, let me finish. I would strongly advise you to keep that going while you develop some methodology knowledge. First-time entrepreneurship is a very steep learning curve. So I would really like you to learn methodology while you have the income stream going and kind of plan out your, entrepreneurial journey, keeping all that in mind and not giving up your, paycheck. We call it bootstrapping with a paycheck. So some people do it while holding on to a job. You're doing it with consulting. Either way, it's fine. It's very helpful, and you will, if you follow this, you will understand along the way how helpful it will be for you to have not that additional stress of how, losing your income and having to basically tap into your savings. We've seen repeated examples of people who come here after spending 4 or 5 years of doing a startup full-time, which hasn't gone anywhere because they made every single mistake under the sun. By the time they come to us, they're kind of out of steam, So
Right. You said a very beautiful point, and it actually replicates and resonates with me very much because I've been there. I've done that. I quit my job like back in 2011-12. I was doing my own venture, started a company on a physical commodity trading business. It's not on a technology space. It's like more on a physical commodity trading, dealing with traders. I was living in New York at that time, so I was engaged in it, and I didn't get anywhere. We signed a few, like almost 13 contracts with many internationally reputed companies. It didn't go anywhere. So finally, I came back to tech, my base. So I'm being in Silicon Valley. I actually started 2 companies, and it ended up in the same way. One in real estate, one in trading. And now in technology, I don't want to repeat it. So that's why I have my job. I have my consulting business.
And you will benefit immensely from studying the methodology that we use. So the first step I would recommend to you is to just join 1M1M Basic and study. Allocate good chunk of time to just study using the online curriculum, and you will learn a tremendous amount. And you sound like someone who is capable of rigor and personal discipline. So if you just do that, I think you will make lots of progress. And then you can start coming to we have meetups almost every week on a regular basis. So you can start coming to the meetups and engaging with us. This Sunday, you could come to the 3 p.m. meetup in Menlo Park and get going.
Yeah, sure, definitely. I'm looking forward to it. And one more question. So what do you think, is it like, developing my MVP and or validating my idea against the market and developing MVP, is it the first step, or joining the program and going through the curriculum is the first step? What do you think, from your experience, will be the ideal way to go?
MVP is not, I don't want you to write a single line of code until you have followed the methodology and validated your idea.
I see. Okay.
That is a strict departure from conventional wisdom that we have used regularly, because people develop MVPs without doing a business case analysis first, and often there is no business case, and it becomes a solution looking for a problem, and that is not the way to build a startup.
Okay.
So let me take Satya's question. Do you have all your questions answered, Satyabhama?
Yeah, definitely, Shramana. Thanks a lot.
You're very welcome. Sachin Maskey from Dartmouth, Massachusetts is asking, I am planning to build world-class diabetic center with comprehensive care and treat diabetic complication in Nepal, where I was born and raised. I'm a doctor here in the US since 2006. I'm still in conceptual phase and would need $3 million of startup costs. My long-term goal is to open the center all over Nepal as franchise model. Not sure if 1M1M can help me to raise capital costs to do the center in Nepal. The answer is no. We have no expertise in raising $3 million on a concept to do a franchise of pharmacies in Nepal. This is not our sweet spot. And your other question also, I don't think this is the right place for it. You're planning to have a research opportunity education program for diabetes patients, etc. This is not our sweet spot. We only work on technology and technology-enabled services businesses. That's it. Anybody else? Any other questions, comments, issues that we may address before we adjourn?
I have a comment, Sharmana.
Yeah.
When Jennifer was talking about, she made a point that they really prefer a mission entrepreneurs.
Missionary, entrepreneur, mercenary, yeah?
Right, right. Well, you're an entrepreneur and you have a mission. Can you clarify your mission for everybody? What is the mission of your
Our
mission
mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And that stems from the philosophy that the large percentage of the acceleration and incubation support that entrepreneurs have today are operating as feeders into the venture capital ecosystem. However, over 99% of the entrepreneurs out there do not qualify for venture capital because they're not building hyper-growth, hyper-large-scale businesses. So it's better for those kinds of companies. These can be great businesses, but not necessarily great venture investments, so they have to build businesses differently. And our mission is to be an inclusive incubator and accelerator so that we can support all of those types of businesses, not just venture fundable businesses, but also the ones that can be good, sustainable businesses. And our philosophy is entrepreneurship equals customers, revenues, and profits. Financing is optional. Exit is optional. So that is the mission of 1 million by 1 million. On that note, I'm going to adjourn the session. We will meet you back here next week, or maybe in the meantime at a rendezvous or something. I'm actually speaking at an event in Milpitas today, so if some of you are planning to come there, I guess I will see you there. Otherwise,
yeah,
I'll see you next week. Okay, great. All right, I'll see the rest of you soon, next week, or maybe at the rendezvous this weekend, and keep making lots of progress. Bye, everybody. Thanks for coming.